Hello, it is the 26th of March 2011. Welcome to the Silver Log and today's silver analysis. And I've been comparing the current rally with the one from 1979 pretty much since it begun back at the start of the fall of 2011. There were some people stating, well, you can't compare it. There is no comparison. And, well, I obviously can compare it because I've been doing it. And oftentimes, history doesn't repeat itself, but more so it actually rhymes rather than that of repeating. And thus far, we have seen that the last few months since the August breakout has outperformed the 1979 breakout. Now, it has a long ways to go, as on the overall spectrum of things, we are right here. And it managed to have a gain of 700%. Now, 700% from our current breakout point, which is around 17 and 3 quarters, does signify a level up to 140 per ounce. And the length or duration of the 1979 rally was that of about a year, a couple days longer than a year. And the breakout was August the 24th of last year. So if the time frame or time duration equals to around the same, well, then that would take us to the end of August of 2011 to get to this point towards here. We'll see. We'll just keep on tracking it as it moves forward, adjusting the message of the market, and see how well this market rhymes. Now, over the last 40 years or so, this is a line chart of the nominal prices in silver. And what we'll do is we'll compare this rally from the start of it in here to the start of it back in here. The original rally back in the 70s had a nice move higher, sort of like we had in here. There was a time correction from 75 to 79, just as there was a time correction from 2007, 2008, 2009, and then in 79 it had one final large rally, and it's just starting to show the rally right now. So if some people look at this chart, they might state, just by looking at the last little while, that this looks as if this is up too much. And it may look that way, but did it look like it was up too much in here? Well, after you had some gains, maybe not as much. But continuing on the rally, the length of the last rally from the bottom of the level, which was around 12 or $1.20, $1.25 an ounce, to the top part of it, would work out to around the same duration or the same amount of increase from its last bottom. So the point from here to here worked out the same as here towards in here. Now, if we take the level of the bottom of the last one that we had and move it up towards the top, then we could literally get what we can see as a lot of potential upside, bringing us well past that 114 mark, really towards the 130 level as a possible area, really more potential probable as the fundamentals for the silver mixed with the technicals work together. And I get a lot of people talking about the fundamental analysis, how, well, technicals don't work because the market's manipulated and all that kind of stuff. And overall, technicals pick up on what the manipulation is telling us. It picks up on the message of the market, regardless on if it's manipulated or not. Technical analysis doesn't really care. Now, for successful or for doing better at trying to make predictions, when you combine the technical analysis within the fundamental analysis, then that can oftentimes give you better results along the way. The final thing that I want to do is talk about the suppressing the price of silver and how they had to do this to keep their currency afloat. Now, the fundamentals were stating when we were going down towards in here that it can't really go much lower. Why is that the case? Well, we live in a world with inflation. Back in 1984, back in 1986, it wasn't hard to figure out, yes, we do have inflation. Look at personal products and services and goods. How much are they up over 10, 20, 30, 50 years? Thus, what is the rate of inflation? So if you're looking at a 40-year chart priced in fiat currency, then a break-even point has to have a trend line, something like this, just to account for inflation. Now, where was proper value back in that day and what was the rate of increase? That is up for speculation. I would guess that the rate of increase is, as far as what real inflation is roughly 6-7% on average per year. And secondly, where was the valued or correctly valued price from this period to this period? Because markets go from way undervalued, which is in here, to way overvalued, which was in here. So where was correct value? Was it here? I don't know, but it would be somewhere in the middle within within the top and the bottom. So when you have a big move and you start to correct, that's normal. And if you're looking for signs for the market to be stating it's up too much, then you're going to see massive volatility moves, sort of like we were seeing it here. We are not seeing that right now, and the massive volatility is days of 8% here, 20% there, 5% here, over and over again. That is not happening. So we're way undervalued here. We're a little undervalued here, and most likely we're going to have to come up past 100 per ounce just to get to currently valued, and most likely it will go from current valued to overvalued. That's a most likely scenario, as that is historically how markets have tended to react. So I'd like to thank you for watching this video and have yourself a great day. Bye bye. And one final segment before we end this episode, and that is, if they didn't keep the prices of silver suppressed, it really wouldn't have worked out. If you go to silversync.com and you look at the COT reports, you can see that the big commercial industries have about a 3 to 4 to 1 ratio of shorts to long on their futures and options contracts for silver. Therefore, a majority of amount shorted, which has made the market go lower. Now, why is this? Well, let's take a look at what would have happened had, of course, this downward manipulation, say, never were to have occurred. Let's look at maybe a different scenario of how silver would have played out, because as I was saying, it got overvalued at the top part, and when this is the case, you get high volatility, so the movements to this point would not have been that much of a surprise. Now assume that the market would have stabilized in this area and taken some time to really go over those highs, then this is what you might have seen. But here's the problem with this. The problem is people would have been waking up in here. I don't think they wanted that to happen. Just an opinion piece. Thank you for watching.